Giants Room, everyone. So just wanted to go over a couple charts here really quickly. We're going to start off here with the old GE, General Electric, pulling down alongside of the triple Qs right now. You remember I was a little bearish earlier on, and we popped off that news while I was bearish, and the market actually ripped up, banged against resistance right here on the triple Qs, as you can see. And I just want to show you exactly what happened here on your triple Qs today. So we were coming up. We hit resistance at 69.30 right here. You blipped through, hit 69.33, turned back, and never looked again. Again, this is a little where my bearish sentiment is coming up. I think if you are bearish, for example, look for retest to support levels in the market. Shaky things around the corner. With uncertainty can come the sell-off. See, the bottom line is as long as we just sit here and we're jobless and, the jobless rate is high and oil keeps going up, but everything, there's no big news coming out, everything just steadies off. As soon as there's a little bit of scare, a little bit of fear, people start to take the counter trend trade, and you see exactly that's what the Qs did after breaking above $70. We were talking about these levels, and not only that, I was talking about this ascending channel support line all the way down by 65.84 today. I mean, I don't think it's going to test that today, the triple Qs, but I am looking for $66.5 to $67 on the triple Qs. If you are bearish, the first point to watch is $67.85. That is where your bear flag continuation pattern can follow through to the downside there with volume. So a couple support levels just to watch right there on the triple Qs, as you do have a very sharp reversal right now. Just want to bring up a few trades and some things I outlined. And again, I could put this up in the file share with no problem, but I just want to talk about General Electric here today, that symbol GE, and basically retested its 4-year high today. You can see right there, your October 3rd, 2008 high, $23. We came all the way up to that 4-year high. This is a serious resistance level. It is a heavy resistance level. So without a break of $23, you have to realize that a serious reversal in the stock could occur. And keep in mind, the daily swing confirmation will only come in to take it overnight potentially if it does go above $23. So I did get rid of my shares. I'm still holding my calls. I'm not sure what I'm going to do on this thing. I guess I am sort of scared that it's going to gap up one day. But if this market continues to show me the signs of weakness that it has been showing me, there's no need exactly to try to, try to be, I don't want to be more lackadaisical in this position. I don't want to just sit there. I want to be more pinpoint accuracy if I could get in, especially when the markets are strong. So still holding the calls from now, but you have to realize with that heavy $23 resistance level does come a heavy trigger, heavy resistance, very hard level to break. Let's move on along. I'm going to talk about EDU, which had a big reversal here with the market right now. Did stop me out. Still my best name of the day. And I do have $1,200 to show for it. But gap fill level right here was what I was watching right now. We're talking about that 1750 high right there, right where that gap fill level began. And you could just see you're breaking into that gap level. But remember, like I said before, your only overnight conviction comes if it could close above 1750. I'm telling you, taking overnight, sometimes opening overnight positions towards the end of the day is sometimes a rule that goes against many traders, and I wanted to talk a little bit about that. What kind of rules go against a trader if they buy towards the end of the day? Well, if you buy right at the end of the day, you're likely not to be up or down big on a position, and you're told only to turn a trade into an overnight if you're able to be up on the position, obviously, before you go home overnight. So it does go a little against that, theory and that mindset, but again, it's just what I see happening right here. Did get out of my final shares, was a great sell at 1796. And I'm just going to see what happens right here in the stock. If it closes above 1750, I can attack. But remember, the market is pulling in. If this market does decide to continue this bear flag pattern right here on the triple Qs to the downside, and as you could just see right here, You got 68.51 to the low end right here. So we just blipped. That's where that volume spike after 1 o'clock came in. The reason for this volume spike on the 5-minute, and you see right here, look at the volume spike. This is the power of trigger levels and previous lows and highs, and this is what factors into pivot points, and all these things are all based on these bars and their lows and highs and opens and closes. So just watch right here, 68.51. You did blip through that level. If you start seeing 5-minute bars close below 68.51, kiss your stock market goodnight. Kiss it goodnight. And what do I mean by kiss it goodnight? I don't know. You know, just I don't know, maybe short it on a pop, short it on a rally. Look to attack the weaker names. I know you're able to benefit off some of the stronger names early on. General Electric has done absolutely nothing for me. I got some of these calls a few cents higher. I'm a few cents against me right now, just holding 50 of them at the moment. But, you know, you take a look at this General Electric right here, you realize the type of top you're putting in. And just to give you that example again, I mean, you could just see the absolute enormous range of where you're breaking out from. So it's going to be interesting. But if the market keeps pulling down, the conviction behind General Electric working decreases. Nothing's 100%, but with the market going against a bullish position that moves with the market, GE, part of the spiders, obviously moves alongside the spiders and the triple Qs. Obviously, a market pull down tends to represent negativity for the name, just like a market rally represents bullishness for the name. So the chance of the $23 resistance holding is increased greatly with the Qs, with the spiders trading in the range they're in right now. So without further ado, I did want to talk about a topic today. You see where I use my little whiteout. How does volume affect the way stocks move? And we see that there's so many dimensions to stocks, hence my little nerdy diagram that I stole right there. You know, it has so many dimensions to it that you really have to approach it from many angles. So without further ado, I do want to just get into a small discussion regarding volume. Remember, you could go in depth. We offer phone coaching. We offer, you know, education. If there's something that you wanted to learn in particular, if there was one thing that you came up and you said, I really want to learn this, we would be able to help you with something like that. So keep in mind, I just want to briefly get into it just to give you guys a good heads up on the different types of, like, how volume affects the way stocks move. And, you know, when you see rising prices on light volume, it's basically indicative that few investors are participating within the price rise. This is generally considered bearish for the stock because it means relatively fewer buyers are willing to pay those higher premiums, those higher prices for the stocks. And if the price starts to fall after a low volume rise, there may not be many buyers willing or able to buy more shares, and the price can fall quickly. This is a little bit of the psychology behind it. When prices are falling, don't think it's just the exact opposite. That was for rising prices. When you have falling prices, light volume represents uncertainty in the market as fewer traders and investors are willing to buy or sell, both of them. Light volume often occurs when a falling stock is nearing an important price support level, an important price bottom, an important floor, an important level that the stock may hold and will prevent it from further falling. As a result, light volume price decline can often have bullish implications. Now, let's talk a little bit about consolidation, and we'll get right into those Apple levels. Let's get into a consolidation. And after a stock price has made a large move higher or lower, it will often stop and rest for a period of a few candlesticks, whatever frame you're looking at it digest on, and it could take several candlesticks possibly. And this resting period which occurs is when traders regroup and reassess the price. That is considered the consolidation. And generally, prices do consolidate on lighter volume as fewer investors and traders are willing to buy and sell. And after consolidating, the price can either decline or it can continue rising depending on how strong that continued trader demand is or that continued investor demand is. So without further ado, let's break out the situations where that makes sense. Okay, I want to give you an example. We're looking at a daily right here of the triple Qs. And you know what? Let's make this interactive. So much easier to follow along when you could just click the link and see it on your own screen, huh? We're going to take a look at the triple Qs right here. What I'm going to do is I'm going to look at the daily. I'm going to draw a line on this daily. Then I'm going to take that major support line and I'm going to create a parallel line. Oh my God, magnifico. All right. I'm just going to erase these last two because I want you guys to focus on the bigger channel here. And if you wish to follow along, right here on the left side, you could see you could just get right to that triple Qs chart. And we were noting here, the breakout of this ascending channel resistance on the triple Qs. When this first happened on March 13, here in Shine's room, I was talking about the market topping off shortly after and pulling in. Shortly after, in this case, was around 3 weeks. So just keep in mind that when you're looking at these prices and these stocks to move, when the Qs broke out of an ascending channel resistance range, this is how volume affects it. Your conviction for breaking out of the channel, to know your channel is drawn correctly, you must have a volume surge to break an ascending channel, a rising channel resistance level. And when you see that volume, 99% of the time, the stock does, or the ETF in this case, will come back and have a bearish move back. Now within this channel, based on my methodology, is and this is what differs. The majority of methodologies say buy this thing on support. So when this thing came all the way back right here on May 18th, we were able to call that bottom here in Shine's room. We caught that. We caught this bounce right here off of May 18th. Now, how does volume interpret into all of this? Well, here's where my theories differ from the rest. It is common knowledge, look anywhere on the internet, read any book, that when a stock breaks ascending channel resistance, it's considered a bullish move for likely prices to move higher, for a likely move higher. And it's considered one of the most bullish things a stock can do is break out of an ascending channel resistance level. Now, for me, you can't really label anything 100%, but for me, the easier trade is look for the short trade when you start topping out here. And once you could start reading the top out, you could get significant pull down here in the market. You can pull all the way down towards support. And what you'll notice is that support pull-in will be done on low volume. So here are the rules. Try to stay with me. Ascending channel resistance takes a lot of volume to break up. After you break up with high volume, the volume must remain high in order to remain above the ascending channel resistance level. If the volume does not remain high, if the volume remains low, then you are more likely than not, 9 out of 10, 99 out of 100, going to have a bearish move into the bullish channel where you'll actually pull back. Now, let's talk about a descending channel. On a descending channel, when a support line breaks, you'll see high volume behind it. Here, let's type in any stock. How about that Apple, right? Perfect example. Volume breaks up here. Apple tops off at all-time highs, and you know I'm coming bearish around that $700 level on Apple. You guys know it. It went higher, went to 705. 700 wasn't the line in the sand. I think my line in the sand was like right over here. 681, and then we broke up, and then I saw this rising line right here, and this is where I was playing the $700 level to the short side. And then eventually, Apple finally took a crapple. But look at this Apple right here. Look how many times Apple looked like it was going to explode through the roof and pulled down and tested that ascending channel support line. So look what happens. Ascending channel support in Apple, 648.5. This is where I'm coming up with these 650-ish targets in Apple. You have to realize this is my conviction that you get a bearish move in the bullish channel to a support level, especially with the markets pulling in. I think it's very likely that Apple retests 660.35. I don't know if it happens today. I could really care less about the timing. For me, it's all about, is Apple on ascending channel support? Now, let's say Apple does hit ascending channel support. Let me draw for you what I plan on doing with Apple. You know what? Again, because there's a really sexy way I think of doing this Apple trade right here. Oh, what a coincidence. Get that ascending channel in. Create a parallel line there. And I'll show you something awesome. Volume conviction. Volume conviction. Yep. Right here, if you wish to follow along, is a chart right here of Apple. So you see Apple right here. You see this ascending channel support. I actually probably should have drawn it a little lower. Messed up there a little. And what you do see is you see Apple banging against support line. So last time Apple was at this support line, the real last time it cracked through it was right over here. You could see right here on the 23rd. And then you saw from there, from 593, that Apple actually pulled back 20 points. So for me, a logical level to look for a long in Apple is going to be 20 to 25 points below this line. That would represent around 640-ish in Apple. And if you could get Apple in that 640-ish level on this channel breaking down, I think you're going to get a sweet little 10-15 point bounce in the name. And that's ultimately where I look to attack Apple, because you do see that the support has been broken before. You do see how it's pulled back. So the trick is to not buy it on the support line, is to use that support line of a gauge of how far underneath it you're willing to buy it. And that's the only way I could play Apple bullishly here. Bearishly for Apple, we talked about lower volume, tapering it off, and look what happened. The volume pulled right back within the channel of Apple, right back, bearish move into the bullish channel, very likely move, and it's giving Apple a real good chance to digest here. But if you do see the Qs continuing to go down, this Apple is going to be, if not leading it, at least right next to it on the wagon, marching it down. So you got to watch the market. If you're someone who's bullish on the market, figure out your time frame. Never buy things. For those people who bought Apple at 700 for like a longer term swing, or for those people who are still holding their Apple from when it was 700, I mean, shame on you. I mean, like seriously, shame on you, because when you look at a name like Apple, you know not to chase it through the highs. And everybody has this fear of Apple that it's going to run to $1,000 without them. But Apple, regardless if it gets to $1,000 or not, one thing I promise you is it's not going to whip you out of the move. It's going to give you plenty of digestive opportunities, just like it has for the entire lifetime of its trading. So to wrap things up, ascending channel resistance level breaks. High volume needed. From that point forward, low volume bearish, high volume bullish. Descending channel support breaks. Heavy volume must be needed to confirm that support break. After the support breaks, if volume is light, that is bullish for the stock. If volume is heavy, that is bearish for the stock. And why they say don't short a dull market. You've heard that saying. I don't believe that bull. I really don't. I believe I'll short a dull market all day and night. If you're resting by a resistance level, a key resistance level, I'll short you. If you're not and you're right in between the range, I'm not going to go long or short the market. So just keep that in mind that you really want to peg those levels. I know a lot of you guys were holding the puts on Apple from the $700. The guys who went further out are really capitalizing on this idea. You're very welcome, Vince. I hope that helped you see it a little. Again, a lot of different things, a lot of different levels to approach. What I'm going to do is I'm also going to upload these two things for you guys, just for your own help. If you guys want to watch this General Electric right here, obviously, see where that $23 level comes in. And from this point on, remember, these are living charts we're going and breaking down from here. These are charts that are alive and that we're bringing fresh today, like, to your hands. Like, follow this thing. See what GE does. The important thing isn't that you take a short or a long on this trade, which actually reminds me, I do think General Electric is going to sway heavily from that $23 level. I mean, what would, October $23 calls and October $23 puts look like in General Electric as per our discussion when you're going to get a big move one way or the other? That is what I see happening here in General Electric. You're approaching a 4-year high, from October 3rd, 2008. Obviously, in a couple days, that'll be officially your 4-year high. But just keep in mind that this is the iron ceiling for the stock. I want you guys, especially for you guys who, like a trade and like this idea, to really follow with this General Electric here, because if the market shows any sort of bullishness, remember, we are in a bullish channel, but if the market shows continued bullishness, which is, in my opinion, very doubtful today, this General Electric could potentially rip, and it's going to be one of the first places my eyes go to. So I hope you guys enjoyed this webcast presentation. If any of you guys have any technicals, any stocks you'd like broken down, now would be the time to ask. You're funny, Brooks. Thank you, sir.